So now we are in the aftermath of the crash. So there's some very important things that we can actually learn from in this video. So as per usual, I'll be covering the news as well, breaking down the market and talking about a few partnerships here and there regarding Ocean Protocol. So let's get into it. Cue the intro. So now we are in the aftermath of this massive crash. Double-digit drops across the market. Bitcoin crashed to $30,000. Everything else crashed 40, 50, 60%, most altcoins. And now a lot of them have recovered a lot of their losses, but still not quite where it was before. Now, let me show you, if you're not following me on Instagram, go ahead and click on the link in the description and follow me on that, because this was my response during the crash. Because I knew that it's temporary. Now, we haven't recovered yet. There could still be some further drops, but in a month's time, we'll be looking back at this thinking, why didn't I buy more? Why didn't I take advantage of this sale? So let me show you my response. This is how you need to react when the market is going to shit. So there you go. That's how you need to react. Relax, go for a walk. It's fine. You know, we'll see brighter days once again in a month's time, in a week's time, maybe 2 weeks' time. So nothing to worry about. So I wanted to show you that real quick, that these things happen. We're not at the end of the cycle yet, hence why I'm relaxed. Now, if this crash happens in 5 months' time, then by all means, you know, throw the baby out of the pram. This is a code blue alert. But we're still in the midst of the cycle, so it's not a big deal. So that's the kind of reaction to the crash. Let's now get into the news and see what's going on. First and foremost, we have Elon Musk in the news. And it's the reason why I want to cover this is because it's funny how first he was seen as this messiah, you know, saving Bitcoin. He got Tesla to buy over $1 billion in Bitcoin, and he was sending Dogecoin to the moon. And now all of a sudden he's getting trolled because he said a few things about Bitcoin about it not being sustainable, and people are blaming him for the crash in Bitcoin. They're blaming him for saying negative things. Why are you saying this, Elon? Help us pump the bags. Don't do the opposite, you know. But he's just one man. There's no need to get angry at him. He's being honest. Bitcoin was unsustainable. It's using a lot of electricity. But to actually get to start trolling him because he's not saying what everyone wants him to say, it's just ridiculous in my opinion. So he said something to someone who's still considered the messiah in the Bitcoin community, Michael Saylor, and they had a bit of a back and forth, and now crypto Twitter seems to be getting at him. Having said that though, so they exchanged a few memes, nothing serious. Having said that, he's still having an effect on the market. So when he tweets about Bitcoin, like so, I haven't sold any in response to Dave Lee, Dogecoin actually rallied 20% after that tweet. So there's a bit of a love-hate relationship going on now. But the thing that, you know, I kind of want to say is, like, don't look at these guys as messiahs, you know. They're just, you know, they've most likely got their, you know, ulterior motives. Maybe he does want to pump Dogecoin's bags, or maybe I've heard a story that potentially because he actually hates the SEC, which he's literally stated in an interview, maybe this is a way of him getting back at them, forcing their hand by pumping Dogecoin to the moon and forcing them to react. So that's the first article about Elon Musk. You know, if you're an experienced trader, I would say, or an investor, you wouldn't take it too seriously. So if you are taking it seriously, you know, don't take it serious. He's just one man. Now, this is the more important article relating to the crash that just happened 2 days ago, Or was it 1 day ago? And that's in regards to the actual scale of the correction, comparing to history. Now, I did cover that in the video on the day, where I looked at what normally happens, what we can expect from kind of Bitcoin drops going forward, and that this is nothing out of the ordinary. But this is a more accurate in terms of each individual drop since Bitcoin's inception. Now, this goes back to 2012. The thing you have to bear in mind, though, of course, is there was a lot less liquidity in the market. So Bitcoin at $7, you're talking about 10-20 million total market cap. So a multi-millionaire could, by himself, not even a crazy millionaire, move the market. So it's a lot easier to move the market then compared to now, but it's still, doable. So the biggest drops came 82%, 86% in a matter of, days. So this, China bans Bitcoin. So this is why when China bans Bitcoin, anyone that's been around for a couple of years doesn't take it serious. But back then it was a lot more serious. So China bans Bitcoin and Bitcoin exchange. Mt. Gox suffers hack, regulatory troubles, and eventually bankruptcy. So that was quite big at that time. So that resulted in an 86% correction. We have multiple in the 40s and the 30s, again 30s. So the big drops became less. They happened less as time went on. But the last big drop was during the 2018 bear market, which happened recently, and that was from the top 19,666 all the way down to 3,220. So massive drop. A lot of people lost money. This is why I always say take profit, take a little bit of profit. So in the worst case scenario, you'll be all right. And even in June of 2019, it dropped 60%. So there was an initial rally that we thought, okay, this is the end of the bear market. And it resulted in a massive drop of 60% all the way down to 5,000. Oh no, this was the COVID crash, I think. Was it? 2020. This might have been... Yeah, so March was the big drop. March was the big drop, which is the COVID crash. And now they're saying Elon Musk will stop accepting Bitcoin, but this is definitely not the reason. We're going to get into the reason next. So again, this is just to illustrate that these things happen. Don't get too worried about them. Next, so this is, I believe, the most likely reason for the crash, and that is excessive leverage, right? So the leverage in the market, so people using leverage, so let's say they have £100, they can use an exchange to use £1,000, so they might use 10x leverage to get more profit, but it's also much more likely that they'll result in a liquidation, because any small movement when you're using a lot of leverage will result in you losing your funds or getting liquidated, as they say. So getting into this article, the latest dip didn't hurt as much as March 2020, but it did clear out excess leverage, said Nexo co-founder and managing partner Anthony Trenchev. It was so rapid because there was quite a lot of leverage. That's why the crash was so deep. There you go. Because there was so much leverage, something that might have been a small crash ended up being a massive crash. Now that it's cleaned up, we don't have such excessive leverage in the system right now. That's why we're seeing the recovery right now. And this leads me to believe, as he's saying, it's most likely we are past the big dip. There might be some more, but we're past the big dip, and most likely we're going to start seeing recoveries soon. Nexo lowered it. This is, this is kind of, although I got a feeling there was a retracement coming, if I had seen this, then maybe I would have taken more profit. So Nexo lowered its loan to value ratio a few weeks ago because of the froth in the market following the lead of Unchained Capital, which reduced its loan to value to 40% in February. In late April, crypto lender Celsius tried to help customers prepare for the market crash by warning them on Twitter that they should add crypto to their accounts in case of margin calls. So what they're saying is, everyone, in case something happens, you might want to add more collateral so you can handle any big swings. This is literally their warning, saying basically if anything happens, you're going to get like a margin call and something might happen very soon. That's kind of the sly warning that they were giving. And again, if I had seen this, then I probably would have taken more profit off the table. But I did take a decent amount of profit when Ethereum was at 3,900. So this is most likely the real reason why the dip was so large. And whenever everyone is over leveraged, that is when any little pin can pop the bubble and result in a massive crash. Look at the example of 2008 global financial crisis. The reason why it was so crazy is because everyone was extremely over leveraged, and this is exactly what's happened again. So in my opinion, that's the real reason why this crash was so severe. Next, we'll look at Pancake swaps, Pancake Bunny. Again, going back to what he was saying, how the market was frothy, like any meme coin was just making crazy returns. You know, the Dogecoin competitor, Shiba or whatever, Inu, made crazy amounts of money. SafeMoon, all these kind of meme coins that don't have any value just exploded because of such speculation and leverage in the market. And this Pancake Bunny, 44 million, you know, these things aren't like technically sound projects, were stolen as Bunny token crashed 99% in seconds. Binance changed the largest yield aggregator, Pancake Bunny, was exploited. The price of its native token crashed 99% in seconds before recovering to its current state. They are looking into the attack as to why it happened. But again, this goes to show that when projects like these that might not necessarily be fundamentally sound are making crazy money, and that's when you know there's a reset coming very soon. And this is a very good indication or a lesson. One of the key lessons for today is when we get close to the next major kind of run, especially the end of the bear market, this is what you need to be thinking. When you're seeing everything go to the moon, all these meme coins, all these crazy projects that don't have any value, when you see them going to the moon, that's when you need to start ringing the alarm bells in your mind. I need to start taking profits. When there's greed in the market, take profit. Because otherwise, the next major rally, probably not the next one, maybe the one after, will be the last one in terms of the end of the bull run. So, moving on to the partnership of today, and that is with Ocean Protocol and SingularityDAO. I did cover SingularityDAO in a previous video, and a offset from the SingularityNET, and this is essentially them using AI to manage a basket of tokens like an ETF, and so using AI to kind of regulate it and to manage it. So you put money, it's like putting money into an ETF. An ETF has a few different stocks in there, and then you can invest in all of them by just investing in that ETF. So that's SingularityDAO by using AI. So this partnership is actually very interesting because, so going into this, Ocean Protocol continued its support of SingularityNET by collaborating with SingularityDAO. SingularityDAO's AI agent will consume trading and DeFi data supplied via Ocean Market, and SingularityDAO's Dynasets will include Ocean tokens. So what they're saying is their ETF one is going to take Ocean Protocol's token in there as part of the set, and the second part. So firstly, SingularityDAO is a non-custodial DeFi solution allowing members to manage dynamic token sets called Dynasets, consisting of a bundle of utility tokens. These Dynasets are somewhat parallel to ETFs in traditional finance. Tokens that have limited liquidity on their own become easier to trade when aggregated into sets. SingularityDAO makes it more beneficial and less risky to hold a collection of utility tokens that individually have only modest liquidity, opening the flow of capital to innovative projects. So this is as mentioned in my previous video covering this could be pretty big, having like an ETF managed by AI in crypto. Now you can imagine, fast forward a couple of years when the market's even bigger, how important this will be. Now, so that's the first thing where the partnership works. But the second part is, so SingularityDAO actually needs a lot of data to actually manage dynamic token sets, executive predictive market making strategies to provide liquidity for these token sets on dexes. So it needs a lot of data to do all of this, to calculate all of this for its strategy. And now, of course, now you can understand why this partnership is going to work, because the second part is Ocean Protocol, Ocean Market is actually it has a lot of this data that it needs. So they're going to work together to provide data to Singularity now. So it's going to be a beautiful partnership that works on every level. So it's, as they say, a match made in heaven. So the better Ocean Protocol gets, and the better, or the more data Ocean Protocol collects, the more data that SingularityDAO can use to become more accurate and better at its purpose. So this is essentially the partnership that's happening between the two, and you can imagine if they both become relatively successful, how good this is going to be. So probably one of the best partnerships I've come across in a little while, in terms of how beautifully matched they are. They just go hand in hand. So that is the last piece of news for today. Now we're going to have a quick look at the market. Now, although that is a beautiful partnership, the actual token Ocean Protocol is not looking too beautiful at the moment. It actually went below key support of 82 cents on the daily time frame, and now it's found some support just below that. But what we need to see is, of course, a break above 82, hopefully by the end of this week. Otherwise, if it becomes resistance, which it is right now, and it doesn't break back above, we'll probably see some lower prices. We'll see. So we need to see a break above this level ASAP. Otherwise, it's going to be, it's going to have to go low to find some support down in the 65 cent region, which of course we don't want to see. So this might take a bit longer to recover than some of the other cryptos that we're going to look at today. Now, quick look at Bitcoin as well. As I've said, I've compared Bitcoin, Ocean Protocol's chart to Bitcoin's. Now you see Ocean Protocol dropped below a key support level, and the same with Bitcoin right now. It's just on the cusp of a very important level, 40k, and needs to find support there as well. But with Bitcoin, of course, there's a massive amount of support. It's still scary that it went all the way down to 30k, but it found a lot of support, got pushed all the way back up, and now it's just on the cusp. Now, the same with Ocean Protocol, it needs to hold this level, otherwise we might see some lower prices once again, down to 34, even down to 32 perhaps. Probably not as low as that, but we could get that down to 32 and 34. So it needs to hold this level, hold this zone, use their support and start building on it. What I would say as well is, this is unprofessional, unsolicited advice, my favorite saying, but these are good times if you want to get into Bitcoin or any other crypto while they're still on sale. They're going to start rebuilding. They might see some further drops, but this is a good time to get some of your favorite cryptos. Moving on to Ethereum. Similar story with Ethereum, except it did find support above the previous resistance level, 2500, and it's bounced to the upside. Now it's just at a crucial level, that $2,800 level, which was equal to 2x the previous all-time high. Now it's finding some resistance there. So we need to see a break above this level of 2,800 to start seeing some moves to the upside. But the reason why I say there's potentially room for more downside is because this chart pattern is like a dead cat bounce. When you have a massive drop, a relief rally, and then a further drop to the real level. So this is a potential situation that could unfold going forward in the next few days and next week. So just be mindful of that. I'm not 100% sure or confident that we are past the worst. I think there might be a little bit left, but for the most part, we are past it. Next, I wanted to cover Polkadot. Reason being is because it actually is finding support at a crucial level. Now, I've drawn this chart pattern for a little while now. I said Polkadot is in an ascending, broadening wedge pattern, and as you can see, you've got the kind of the top trend line and the bottom trend line, and it's finding support at that level. Now, it needs to hold this level, which confluences perfectly with the 0.5. It needs to hold this level and start building a move to the upside. That would be very, very bullish for Polkadot. It also found support at the 0.618 and pierced through the 786. Worst case, it needs to make sure to stay above these two levels and then start to make that move up, and then Polkadot will probably recover relatively quickly. One crypto that I was actually quite surprised, one that I've covered in the past, was Perpetual Token. Yesterday, while the whole market was dying, Perpetual Token protocol made new highs. It tapped that level that I mentioned in the previous video, just shy of $15, and now it's recovering, or it's retracing. If it can hold the level of $11 right here on the daily time frame, then I think Perpetual Token protocol can probably build once again and be one of the performers during this red bloody days. Another crypto that I'm still keeping my eye on is Pancake Swap. And what it's done, it's of course massive dip to the downside, and now it's finding support at a crucial level of $19. It needs to stay above this and start building to the upside to start recovering and building the proper reversal. Another one as well to keep an eye out, which is holding support at a good level, is UNI Swap. You can see here, crucial support, $22, and now it's bouncing, looking to go to the upside. But all cryptos are showing the same signs right now. It's recovering, but there is still a chance for downside. So the next few days, for example here, rejected at $28, $27.28. If we can see it break past this and start seeing higher highs and higher lows, then we can start to become more bullish. So I'm expecting some patterns to be forming in all cryptos across the board, and then we can start seeing more clearly which one's going to start booming. But I'm going to finish this video off by saying that, you want to start adding positions in now. There might be some more downside, as I said, but for the most part, we might get 10-20% drop. For the most part, we are closer to the bottom than we are. So we're closer to the bottom, essentially. So this is, a good time to invest. You may be able to get a little bit lower, but you want to start adding positions in now for the move to the upside, for the reversal to the upside. So I'll finish with that. See you in the next video. Peace.